Good day, and welcome to another Answers Weekly Wraps. I am Bev Govender. This week, we're going to cover some US economic data. Firstly, we look at the latest CPI inflation numbers from the US, as well as the recent revision in their jobs figures. Then we're going to move on to some local SA numbers. Our GDP numbers came out this week as well. And then finally, in the AI section, we look at Oracle's results. Huge numbers for that company. I think briefly, Larry Ellison was the richest person in the world. He made almost in excess of $60 billion on one day, which is like I think a record or something. So let's just look at the Oracle in the ecosystem or the AI ecosystem and where its place is and what we can expect, down the line as this ecosystem evolves. So let's start off with some of the US numbers. So firstly, we had earlier in the week a revision in jobs numbers. This is for the year ending March 2025. So basically, most of Biden's last term and a couple of months of Trump's term. So pretty much these are Biden's numbers effectively. And what we saw was the number of jobs that were predicted or had been reported for the last year of the Biden presidency was overestimated by close to 1 million jobs. Now, this is a pretty serious, oversight. And remember a couple of weeks ago, I talked about the fact that Trump had fired the person in charge of collecting this jobs data for the US. And I mentioned the fact that, this kind of weakens, the strength of US institutions. Oh, well, this particular revision, maybe I was, unfair to Trump. It does indicate that there was, some serious missteps by these institutions. But like I had talked about before, the way these guys collect numbers is by doing surveys. Surveys say you sample something and then you look at the historical data. It says, if this sample tells me this, according to historical data, it really means that the whole economy looks like this. Okay, that's how it works. So for instance, if you had to imagine, if you sampled somebody's, blood and you said, okay, these are the numbers I get from the blood. Historically, these numbers correlate with this particular situation in terms of the person's health. That's how it normally works out. However, if you change the nature of the person, so for instance, that person has, had some other issues happened or, changed in some significant way, you can't rely on those historical data comparisons. You can't say just because historically this reading results in or was correlated with this level of health. If the nature of the person has changed, the reading cannot be said definitely to correlate with the same level of health. Here, if you have a sample that says, this sample historically correlated with this many thousands or millions of jobs, if the nature of the economy changed, when you have that reading on that sample, it doesn't automatically means it correlates with the same number of jobs effectively. And it may be that, like I said, the US economy is changing and changing in ways that maybe have a lot more to do with the AI stuff than we have thought. I had mentioned that, if the US economy is changing, one of the reasons could have been AI, one of the reasons could have been tariffs. But this stuff was happening before the Trump administration, before tariffs were put in place. It leaves very few, or it removes at least one confounding factor, which would be tariffs. It could indicate that AI was playing a bigger part in the economy than we have thought. Then moving on to the latest CPI numbers from the US. They came in as expected, 2.9%. CPI core just above 3%. This is as expected, and given the fact that we saw the revision in the employment numbers, I kind of think it just reinforces the fact that we're going to have a cut for the next Fed meeting because, inflation is not getting out of control and unemployment is worse than we had thought. And weak unemployment, inflation is not getting out of control, that should correlate with a rate cut. That's just what we should normally be looking at, and I think that's pretty valid. I think I mentioned before that if you had to look at the U.S. situation, you would say that a rate cut would probably be justified or justifiable at least, and maybe it was something like resistance on Powell to follow Trump's orders in inverted commas that could be pushing this forward or bringing the hesitancy to cut rates. I think now we have enough information out there that kind of would support a rate cut enough that the Fed, would be comfortable to do it. It wouldn't be a situation where you're saying, okay, I'm just basically pushed along by Trump. No, the data does kind of support it. Now, moving on to South Africa's GDP numbers. We had our GDP number for the last quarter coming in at 0.8%. This is a pretty good number, one of the best numbers we've had in a long time. This comes from a very weak first quarter. One of the big drivers here was, or I think the biggest driver of the improvement was, mining. Mining did very well. We've seen a real rebound in mining in the last little while. Everyone knows the gold price has gone to all-time highs, in excess of $3,600 an ounce. But platinum has also recovered, not to all-time highs, but off the lows quite nicely. I mean, some of the biggest movers, positive movers in the market, this year have been the platinum miners, because platinum has gone quite a bit up. And I mentioned the fact that platinum is kind of closing the gap to gold, just because of the fact that there is substitution possibilities between platinum and gold, and you can't have platinum at less than 1/3 the price of gold. That doesn't make sense when you can substitute like platinum for gold in jewelry, etc. So platinum has risen as well, but we've also seen some other positivity in other sectors, in terms of iron ore hasn't done as badly. So overall, we are seeing some positivity coming through in mining, and that's kind of feeding through the rest of the economy as well. The overall number at 0.8%, it's nice, but it must be mentioned that if you have to look at the first quarter and the second quarter, and you kind of average these numbers out, what you're getting is an overall employment number, a GDP increase of just about 2% or so. Now, if you had to look at what South Africa's issues are like, in terms of our unemployment rate, in terms of our level of income, etc., the trends we've seen over the last decade plus, most economists are talking about somewhere in excess of 4 to 5% as being a level of sustained economic growth for South Africa. We talk about several years of that kind of growth level to make a real dent in employment, to make a real dent in some of our issues. The fact that the first half of this year is giving us an average of about, say, 2%, and if you just look at the last quarter, we're getting too close, just over 3%. These are not great numbers. Yes, it's better to be 3% than at 1%, and we've kind of hit 1% a couple of times. We've struggled to hit 1% the last few years, but we need to be doing significantly better than that. We need to be, like I said, 5 to 6%, and it's not impossible. I mean, India is growing at almost 8%. China, for much of its path upwards, was growing 8+%. At one time, I think the guesstimates were they were growing at somewhere around about 13%. If you looked at things like, for instance, the amount of electricity they were using up, etc. So these numbers are possible, but in South Africa's terms, this is better than what the previous numbers have been like. And if they continue, it's better than what we had before. But it won't be enough to make the kind of changes we need to see in the country to fight the world's highest unemployment rate, to basically do something about the fact that we are experiencing, difficulties with, government finances, etc., etc. Now, moving on to the Oracle numbers. Oracle, by the way, is in our AI portfolio. We've done about, I think, 80% or so on since we bought it, in near inception. The results were very, very good, driven by cloud. I have mentioned, I think if you watch I did an interview last week with one of the TV channels, and I discussed, my stock picks, and my stock pick with three of them were Samsung, SK Hynix, and Oracle. And the reason we picked Oracle was the reason Oracle did so well. It was basically the AI the usage is going to benefit companies like Oracle going forward. Let me explain what I mean by that. So, the most valuable company in the world is a company called NVIDIA. They make the chips, the AI chips. That's why it's the most valuable company in the world. Yes, it does other things. It makes chips for like computer games and so on. But the reason it's the most valuable company in the world, it got to this level, is because of AI. Now, look at what that means. That means the chips create enough value to create the most valuable company in the world. So these chips have a lot of value. Now, why would you buy these chips? You're not buying them for just enjoying them on themselves. You're buying them to make a business out of them. So companies like OpenAI, etc., are buying these chips. Grok, XAI, Anthropic, etc., are buying these chips to train these models. So they are finding a reason to buy these chips to train models. So the value of the model must be more than the value of the chip. So the chip is worth so much. The models must be worth more than the chip if you're going to use the chips to make the model. Okay. Then, once you have the model must be used. Okay. You're not going to create something, and the value of it is not just what it is, it's because what you can use to do. So the usage of that model that you created must be more than the value of the model, otherwise you wouldn't have made the model. If you ask my thing. So the chips, which is like NVIDIA, the most valuable company in the world, must be at the bottom of this particular chain. The chips must be less valuable than the models. The models must be less valuable than the usage of the models. And where is Oracle coming around in this chain? It's coming around the usage of the models. It's coming around with things called like inference. It's a cloud solution for these models. Now, what advantage does it have with regards to these solutions, these cloud solutions? Well, the first thing to understand is that these kind of cloud, these AI clouds and so on, they are based on huge databases, data centers, huge data centers, massive amounts of like chips in like a data center, powered by huge amounts of electricity, cool down, etc., etc. Now, you may think, how much like of a moat is there to just basically plug some chips in and charge them up? Well, if it's just one or two chips, not a lot. But as Napoleon said, quantity has a quality of its own. When you get large enough, when you have huge numbers of these chips operating in conjunction, when you have to supply power to these things, etc., etc., there's a certain art, a certain skill level involved in that. It's not as easy as you would think to make sure, for instance, there's no surges across these chips. If, like, for instance, there's for whatever reason an uptick or a downtick in the usage, etc., that could fry the chips, the cooling and all those kind of things. The various like requirements to make these systems work. There is a skill set there. That's number one. Number two is that Oracle is focusing on like the business stuff, not the ask ChatGPT to make me a picture of a cat with a pink umbrella or something. No, it's business usage. And so Oracle is specializing more towards the high, more business oriented part of AI usage, and that comes along with certain things you need. So for instance, everyone can maybe a large group of companies can basically buy the chips. The smaller men can make these really big data centers, but Oracle is specializing on providing the kind of cloud that businesses want. The cloud can be stepped up when needed, that is more secure, that has all these extra kind of on-demand kind of features that businesses demand that individuals may not be as concerned about. That is obviously something that has a lot of value. So again, if you think about it, NVIDIA makes the chips, justifying a $4+ trillion valuation. Then OpenAI, XAI, Anthropic, etc. buy these chips, and so do like Oracle and so on, and they kind of make the models, and models are kind of used by these guys. As you go up the chain, obviously the companies that are working with Oracle are going to be even higher up that chain. They're not going to be using the cloud, not be using these models, unless businesses are going to make more money by doing that. But Oracle is a few steps further up that chain than, for instance, it's called like NVIDIA is. And as we go on with the AI ecosystem developing, expect to find more and more value further up that chain. Some AI company that does something around, for instance, who knows, maybe it's character AI, maybe it's going to be something to do with databases, maybe it's going to be something to do with who knows what it is. If I knew what it is, I'd be investing in that thing directly right now. It's like if I could have figured out Uber or Airbnb when the internet was first invented, I'd be quite a rich person. This is going to be something that develops over time. There'll be something coming along that uses these models in ways that are very profitable, and those guys will be the next winners. So it's kind of like when we had the internet come about. When the internet first came about, it was Cisco. It was the guys who make the routers, etc., the fundamental fiber. Then it moved on to things like Facebook and like Google, which still became very valuable. You know what I mean? And then we started to have like further things down the line, like Airbnb and Uber and so on. And as we went along the way, we found more and more usages of this, the internet. And in fact, even things like, for instance, the Apple iPhone. That is a offshoot of the internet. I mean, if there was no internet, what would the iPhone actually be? A camera that you could not transfer stuff on, and a phone. You think that Apple would have an advantage as large as it does in that environment? No. So that's another thing that benefited from being downstream from the internet. And there's going to be that kind of stuff along the way. And like I said, just a couple steps above the chip. They're the guys that are giving the kind of cloud, access, but that's going to be the next level that allows companies to basically use AI in secure and better ways going forward. And in a couple of years' time, we should have an idea, maybe less than that, we should have an idea what companies are really benefiting from using this cloud stuff. And that could be the next level of investments that we're looking to do. But yeah, the results from Oracle were very good. But it also reinforces what we should be expecting to happen, which is we should be expecting some of that value that's starting at NVIDIA to move further up that food chain. And that's what we're seeing right there with Oracle. Okay, that's it for this week. Thanks for joining me. I look forward to speaking again next week. Cheers.